This is the 10-Minute Contrarian Podcast. This is VP. We're a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 223 is brought to us by Bybit. I tried getting a hold of them late last night. That's not enough time for them to get back to me. But speaking of your cash, last time I checked, you can get up to 10% yield on your USDT simply by putting it with Bybit, amongst all of the other things you can do from a trading, staking, spot buying, lending, copy trading. You can do anything you want here, trade anything you want here, and get a ton of extra bonus rewards simply by clicking my link, which you're going to find in the Bybit blog down below in the show notes. The link itself is at the bottom of that blog. Click it, sign up, deposit, get trading, and once you do that, everything starts to get really, really good because with Bybit, membership has its rewards. It is the 10-Minute Contrarian Podcast, and this is one of those episodes that isn't going to get as much as far as downloads go, but is one of those episodes, really for that reason too, that in my opinion really separates the men from the boys. It's time to really see who the true contrarian investors out there are, as opposed to those who are just LARPing or just consuming content and not doing anything, which I know there are many of you out there who fall into this category. Cash is the real spotlight, the real mirror when it comes to this, because we have all been taught that cash is the safe play every time. It's the least amount of risk. And because 98% of people out there are completely risk averse and don't do anything with their cash, for the longest time at least, they really felt like they were winning because they paid almost no attention to the investments other people were making, which did well. It was more about, and this is how most people are just hardwired, about these investments that would lose a lot of money. You know, in the crypto world, they would always point to that. It was about those people selling things online who finally got caught scamming or had any kind of bad news come their way. Your average person just eats this stuff up because they want so desperately to be validated in their choice to do nothing but keep melting ice cubes in their account as opposed to investing it in something that actually makes money, or at the very, very least preserves the amount of money they have in their account. Cash doesn't do that. So right off the bat, if you're investing anything, you are ahead of most people, but we need to take it even further. Again, this is what really separates the actual contrarian investors from the fakes, from the pretenders, is the ability to get past this one little hurdle that even if you invest the majority of your money, this is the real litmus test at the end of the day. Because as much as I just got done vilifying cash and as much as I have been vilifying cash on this podcast, well, for really the entirety of 2025, you still need it. And I'm not just talking about paying bills and having some cash around for an emergency. In my opinion, and this was episode 218, I think it was, where I laid out my entire portfolio. Make sure you have listened to that episode if you have not yet. It was a sneaky cornerstone episode of this entire podcast series. I have, and for very good reason, about 25% of my entire net worth in cash. It is a key part of my strategy, and not financial advice because I'm not allowed to give it. It should be a key part of yours as well. Now, anytime I so dare bring this up on some of the forums that I'm a part of, and I talked about this, I think, last week, I'm going to kind of stop doing this because these people they're so programmed as far as investing goes because they have no experience and they were only educated in the school of Bitcoin or in the school of gold. Or it's almost like, I call it the born-again Christian scenario where you learn something for the first time in your life and it's exactly what you needed to hear, and therefore you just go completely overboard with it and you become hell annoying. To where there's nothing wrong with Christianity itself, or there's nothing wrong with being a Bitcoin investor itself. It's just that now you're just not open to hearing anything else. When the answer the entire time is always somewhere in the middle. It's never at the extreme ends of anything. But anytime I bring up cash, it's always about opportunity costs this and opportunity costs that. Or these people have been programmed to think that cash is just absolute poison because it does lose its value over time progressively. And as we pointed out before on the show, at a very scary rate the last 5 years. All of those things are true. But the problem is, to remember, talking about how programmed and conditioned people are, we have not had a real recession in like 17 years. And so many of these people were way too young to even remember it. So they simply just don't know what it's like to be in a market environment like that. This is all they know. A market to where if you're not deploying 100% of your cash into the market, that you are really, really losing ground. But because of this, what they are not doing is, one, understanding that downturns, major downturns, do happen, and we are well overdue for one, and they are going to be poorly prepared for one. One of the people who trademarked the term cash is trash is Grant Cardone. And if you recall, back in 2020, when the mini COVID recession happened, Grant had no cash and therefore had to lay off like half of his staff. Because he was so anti-cash, he just decided not to have any. And it really, really screwed him. In a recession that wasn't even a real drawn-out recession. Imagine if it was. So not having ample amounts of cash is a really getting caught with your pants down type of scenario. And you have heard me say many times on this fine program, if you want to vault yourself 2, 3, 4 brackets up in a very short amount of time, we're talking maybe 1 or 2 years, you need to make sure you have ample amounts of cash ready to deploy when the market does turn downward. If we have a real recession, and we are very overdue for one, and so many signs are there, we will be having an episode on this shortly. You are going to see a very interesting phenomenon play out. First of all, unfortunately, not for us, but for your average person, even if they wanted to buy assets of any type on the cheap, they're not going to be able to. Because they're going to be absolutely scraping by, worse than they are probably right now. Recessions really hurt a lot of people. But if anything, even if they don't completely ruin some of these people, what they're going to do is make them absolutely petrified to invest in anything at all. And believe me, I'm going to point it out when it happens, but I'm going to tell you right now too, the sentiment during this time, as we're scraping on the bottom, is going to be so bad, the whole world is going to try and convince you to not buy anything, to not deploy your cash, which is all of a sudden valuable now. People don't remember that either. Cash is actually quite valuable during those 1 or 2 years a recession actually hits, and then it goes back to being shit. But the world, the financial world and the media and everybody is going to make sure that you don't take advantage of this very rare opportunity you're going to have as a cash holder. And they're going to talk about a recession, that's going to be drawn out for 5 or 10 years. They're going to invent words like the new normal, which we've heard before. They're going to have another version of that. They're going to talk about all these big companies that are getting ready to go bankrupt now. You're going to hear it. It's all going to be there, and it is all designed. Why else would they say it? Not to protect you. It's never been that. If you still think that in 2025, you're a moron. And I don't even know why I'm talking to you right now. But the only reason why they say it is to make sure the big banks and their clients get in at these low prices, as they always do, which means you are forced to come in much, much later. And trust me, the banks are salty. We got a very rare and beautiful opportunity to front run them for years with crypto, and they're going to be looking to get one back. But again, this is neither here nor there right now. This is something that I just want I want to put this in your head now, because I'll be bringing it up many times again once this recession finally does hit, because the narratives around it are so sad and predictable. And I just want you to be ready for it. But as they say in China, the word for crisis and opportunity is the same word. And if you are sitting on reasonable amounts of cash, you now have a very rare opportunity that almost nobody else will have. And you can still hang on to most of your portfolio without selling if that's what you want to do. Your only other alternative would be to wait for your portfolio to go down, which everybody's portfolio is probably going to go down during this time, and then sell at or near lows just to get liquid enough cash-wise to buy things. I say, why not just be liquid from the start? Keep your portfolio and use that cash to add to positions you really like. Use that cash to buy positions that may have ran away from you in the past that you still are really bullish on. Or buy companies that you were really never interested in before, but at these prices, now it makes a lot of sense. Again, these are things your average person and even your average, I would say, contrarian investor who really loves things like gold and Bitcoin and crypto and energy are not going to be able to do because those people almost never keep enough cash around. They're so all in on that thing they like that even as, I'm doing air quotes, as prepared as they think they are absolutely ill-prepared for an economic downturn where their entire portfolio is probably going to fall. Now, we here at the 10-Minute Contrarian Podcast feel like we are very well insulated for something like this because initially, how all recessions happen is initially there is a panic and people panic into cash. So your gold and your Bitcoin, and my gold and my Bitcoin, is probably going to drop at first, but it should be the first things out of the fire. I mean, gold almost always has been. Things that are real money are going to start to come to the surface. And knowing what we know now, the one big change because of social media and because of the awakening a lot of people have had, I feel like this move out of the fire with gold and Bitcoin may come even sooner than normal. But you still have to have that initial panic flush out period. So just be ready for it. But also understand, because we focus on defense the way we do, we are going to be much, much better positioned for something like this long term, or even really short to mid-term. So you should hopefully see gold and Bitcoin continue to preserve their value, if not go up, while a lot of equities end up going down, down, down during this time. And because we have cash sitting there, this plays right into our hands. And this is where our place in the world, because remember, this whole thing is player versus player. Everybody's like, oh, I got to make a certain amount of money. Not really. You just have to advance your positioning in the world. If you do that, good things will come, really good things. But again, this is almost too contrarian for most people because almost nobody looks at it this way. So here's a perfect example, since we're talking about cash. Your average person has mostly cash because they're afraid to invest. Okay, good for them. Now, let's say your average contrarian investor who listens to episodes like this, they understand they need to have X amount of cash. Great. What are they doing with that cash? Are they just letting it sit there and melt? Or are they at least giving themselves a fighting chance versus all this insane inflation that's going on in the world right now? Probably A. Unfortunately, they're just letting all of that inflation eat them completely. When maybe you're not going to be able to beat inflation levels like we're seeing right now without taking way too much risk. But you can cut into it quite a bit, actually. Now, this is not an attractive option for people because they're just there's this level of dread to where they're like, well, shit, why even fight it? It's just going to get me anyway. Why cut into it by a few percentage points? What's the point? Well, there's a big point, guy. And again, this is a way you can just incrementally move up in terms of your place in the overall populace when it comes to your wealth. Whether that wealth is a lot or a little, it doesn't matter. Moving up and jumping from one bracket to another can be done no matter where you are, and should be done no matter where you are. Need I remind you, globalism is dead. The free money era is dead. AI is coming for us all. Moving up in this hierarchy is going to be extremely important in the 5 to 10 years to come. So if there's any way you can do that in any form, you need to be doing this now. So for example, in the episode called Good Night and Good Luck, I explained how the value of your fiat currency lost about, according to the United States government, in the U.S., which has the world's strongest fiat currency, by the way. If you're in any other country, it's probably worse. According to the government, your fiat currency had lost about 25% of its value in the last 5 years. Now, this was an accelerated number because of all the stupid things we did during 2020, but it's still very frightening nonetheless. And then I came in with better numbers and said this number is probably closer to being in the 60% range. So again, for most people, why, knowing these numbers, why bother trying to gain any yield on your cash at all? It just seems like a fruitless mission. Well, no, it's not at all. Because whether or not your fiat is losing value or gaining value, yield is still yield, and yield is very important. This is why all of the rich people do it and partake in it and oftentimes obsess over it. Because let's say, your fiat was losing 65%. All right, that means everybody's fiat is losing about that much. And like I said, this is just in the United States, for example. But with even a 4% return, which was very attainable in the United States just simply through the United States Treasury, the most low-risk bet out there. 4% compounded over 5 years is about 21%. And that is 21% you could have taken out of that 65% that literally the entire world was losing. Are you kind of see where I'm going with this? If the entire world is losing 65% on their fiat, yet 21% of that does not apply to you, do you think, as far as jumping brackets goes, do you think you're moving up or do you think you're moving down? By taking almost no risk at all, you are absolutely moving up. Everybody's losing. You're just losing less. And for all of you no-nonsense Forex traders out there, this should make a lot of sense. Losing less is exactly the same as winning more at the end of the day, as it applies to your bottom line, and therefore should be treated with the exact same level of importance. And remember, it's player versus player. It goes back to that old joke I always bring up with the two guys in the woods who run into a tiger. You just got to beat the guy next to you. And this is how you do it, by losing less. You already have to have, in my opinion, this cash set aside. You may as well get paid for doing so. It's really important. But so many people don't think it's worth doing. They do the quick math in their head, and they're like, oh, well, that percentage is really not a whole lot of money, so what's the point? Well, one, you're not factoring in that percentage compounding. And if these little percentage points add up, I said this in the last cash episode I did, I don't spend money or save money unless I am getting paid for it. I get yield on the way in. I get rewards points on the way out. The only time this doesn't happen is those rare times where I actually have to pay paper currency for something, and that's very rare these days, even in Latin America. And if I were to look back over the past 5 years and compare me doing this compared to me not doing this, oh my God, it would be a giant difference. And the amount of effort I had to put forward to achieve this huge difference is really minimal at the end of the day. For those of you who want to take part in the American banking system, which I recommend you do if you're not American, and take advantage of not only one of the best banking systems in the world, but the absolute best credit card rewards points system in the world, this is not hard to do. There are services out there which will get you going quickly and cheaply. We already talk about offshore banking a lot on this show. For a lot of non-Americans, banking offshore in the United States is one of your best options alone. Much less all the rewards points you can get. You're not going to get them right away. You're going to get the lower tier credit cards because you need to build credit. But one, even those lower tier credit cards do give you something. And two, I know lots of people who have graduated to the top tier level of cards. And then on the other side, there is so much yield to be had. We're going to do another yield episode. I think I've only done one throughout the entirety of this podcast. We're due for another one. But there are so many places out there where you can get paid simply by parking your money where you choose to park it. It is extremely low risk. Now, higher up the risk ladder, but less high if you know what you're doing, is taking your monthly chart. And we've talked about this on the show before. We've done a dedicated episode to it. I think it was called Trade Your Money, where you can play real-time Forex with it. And, at least on the fiat side, trade your fiat currency for another fiat currency, which is likely to get a lot stronger over time. I've done this successfully for years with the Georgian lari in my offshore Georgian bank account, and I have done it recently in 2025 by exchanging some of my United States dollars for British pounds. And then, if your offshore banking portfolio is set up right, yet another benefit it gives you is being able to take that other currency you just bought and put it into government bonds, or their version of municipal bonds, whichever way you want to play it, thus earning even more percentage points on top of what you're already getting. I did an episode on this called, I think, the double tap method. You can look that up as well. But between this and all of the great and now much safer yield opportunities you can get on blockchain in the decentralized and centralized markets, there are so many ways. You can just simply take the cash that you are holding for this opportunity that is likely coming up fairly soon and start making actual money from it while the rest of the world just sits there and watches it melt. This is why I said at the top of the episode, the people doing this are the real contrarians. They are doing something which is pretty, really low risk at the end of the day. And they are quietly vaulting themselves up that ladder, sub-bracket by sub-bracket, over the rest of the world, simply by taking advantage of things which have been available to rich people for centuries. Yet now everybody now has access to. So easy, yet so unpopular, even with my so-called contrarians, because we have all been programmed to think that anything but holding all of your cash there for a rainy day or stuffing it in your mattress is for some reason the only sound financial advice out there, and anything else, literally doing anything else with it, would be absolutely crazy and reckless. But you now should know that doing low-risk, smart things with your cash and having cash ready to deploy in the first place, that magical combination of those two things, is not crazy and is not reckless, and is now not just limited to the rich. It's what all of us should be doing all of the time.